beautiful. Oh yeah, you were the other side. I'm a believer. Hello, trader friends. How are you? Good morning. And it is Tuesday, the 24th of February, and I am honoured by the presence of Axel Rudolph. How are you?
I'm all right. I'm okay, Angeline. Can't speak, but I'm okay.
You need a quadruple espresso. That's what you need.
Yes, but I don't drink coffee, so I need to wake up naturally.
You are a stronger man than I will ever be a person, because I need at least 4 to get all this going. And what an interesting night it's been. AI shake up again, caution there. Also one eye on Iran and Israel tensions. Just a really quick look at the markets here. And it's looking like we're still in this wait and see territory.
Well, I mean, yes, so it's been a very, very strange last few days. I mean, this whole tariff talk with regards to US, is it 10%, is it 15%? At the moment, it seems to be 10% again, but towards 15 because they need to get the legalese in order before they can go to 15%. But all of that leads to uncertainty. Uncertainty is never good for financial markets. But having said that, yes, US markets came down quite strongly, over 1% yesterday. I think the Nasdaq, if I'm correct, dropped 1.1, and the Dow actually went down 1.66%. So this is interesting because the Dow was outperforming the Nasdaq over the last few weeks. When it's coming down, it seems to be underperforming. So maybe we are seeing a shift here. And also, what I found interesting overnight is that if you look at Japanese stocks, for example, they didn't really come down as much as US stocks. And there you had financials rising, whereas in the US, you had financials and tech and software stocks falling. So with about 73% of US companies having reported now, most of it is out of the way. Obviously, we've got NVIDIA, the biggest one of all, to look forward to. But yeah, once that's out of the way, it'll be very much Iran, I believe. And then, well, we'll go back to the classics, you know, inflations and things like that. But yeah, interesting markets at the moment.
Yeah, so just to have a quick reminder as to where we stand, as Axel was pointing out, you know, some people say, I think Bloomberg's still saying 10, but of course many other outlets are saying new 15% duty to take effect immediately. More levies reportedly in the months ahead. This is of course on Trump announcing the new duty would go into effect. And warning of reciprocal tariffs, and that he would fight the Supreme Court decision to strike down his reciprocal tariffs. We've also got a lot in terms of earnings. Let's show you this, if I can get it up for you. We've got earnings after the US close, not just NVIDIA. Of course, that's the big elephant in the room. But we have about 162 companies slated to turn in their report cards. Watch for the late breaking company updates as well, because it's not just NVIDIA. We've got some Lowe's, I believe, is the other big one. And it's not just Tuesday after the close today, but also on Wednesday. We've got something like 360 companies reporting. Speaking of which, any updates so far on the Iran-Israel situation?
I haven't seen anything particular, to be honest. What we do know is I think there's a big aircraft carrier, another one now in the region. So if the US administration does want to strike, they are nearly in a position whereby they can do so. But yes, I mean, is it just a bluff? We know that President Trump quite often bluffs, but if he doesn't, it may lead to more turmoil, and then equity markets could actually come off. So yes, I mean, you have to keep an eye on that. I mean, it stopped my trade of the week out from last week when I was short oil, and that trade started to look good, and then obviously it was just blown out of the water because of these tensions. So I find it really difficult this beginning of the year because everything's a bit
in flux.
It is. I mean, with hindsight, as I said, I think yesterday for trade of the week, I should have just gone long the FTSE at the beginning of the year and stayed with it. But you know, had you done that for other markets, you would have been stopped out because US markets actually started off the year really really well, then went back down again. Nasdaq back in negative territory, and then back up, and so forth. So it's a bit in flux, as you say, Angeline.
Let's take a look at some of the individual movers. Then moving on to my watch list, let's take a look at the FTSE there and changing that up to some of the biggest winners. Croda.
Interesting. Well, Croda is result related. I mean, they had 6.6% constant currency sales growth, so that was positive, and also adjusted pre-tax profit up 8.4%. So yes, Croda positive earnings pushing the share price high. If you look at my chart, you can see here that before the earnings, we were already in a very clearly defined uptrend. This is a weekly chart, and you can see here that we've been rising very significantly for the last few years, and I believe we're even trading in record highs. Let me just double check that. Oh, not quite. We're going back towards the highs seen back in 2010, so a long time away. But yes, clearly a very strong uptrend here, and results today add to that upward push. We are trying to push higher, but to be quite honest, in the scheme of things, it's not that. I mean, yes, it's a good advance today, but it's not a huge, 10% up candle or anything like that. But the trend's your friend. I mean, basically, as long as you stay above the 13th of February low here, clearly we're still in an uptrend.
Standard Chartered is the other one that we are keeping an eye on. Pre-tax profit there climbing some 16% to just under 7 billion there. Let's have a look. And here we have it up slightly. As she goes.
Yeah. May I just say, I got the wrong chart because I was wondering whilst I was talking, and I showed people the Standard Chartered chart just now, not the Croda one, which is why I couldn't see the big candle, because surely I was expecting a bigger candle. So yeah, if we can quickly go back to my chart, this is the correct Croda chart here. So we can see today's advance here, which makes much more sense. And if we then go to the monthly chart, you can see that we are, a long way away from all-time highs, but we are bouncing off the bottom here. So the opposite of what I just said.
Easily done, easily done. Standard Chartered just having a less than high candle there, just up a third of a percent. Full year dividend up 65%. Much of this, trader friends, is down to the fact that banks have been benefiting because Chinese companies are increasing their overseas presence, and we know that Standard Chartered has, in the many years before this, been expanding heavily over in that region, much like HSBC as well. So let's have a quick look at Leonardo whilst we're at it, because Leonardo is one of those that I keep an eye on, because they did have results, I believe, today. Is that right, Leonardo?
I don't know, to be honest, Angeline.
Leonardo always sticks in my mind because I have used some of their simulators. And let's have a look, because I think they were out with results today. Let's have a look there. Can't see it. I'm sure, unless it's one of the late ones coming out. We also have, let's have a look at the watch list there. Some other big movers that I saw earlier. Diploma was higher. Let's see whether it's still there. It is up 0.5%. Of course, this is the company that creates all sorts of protective gear, not just for defense, but also for firefighters and the like. Anglo American and some of the other miners, Antofagasta there, copper, also up higher. Let's have a look at the losers list now.
Right, so
there we are.
Yeah, Barclays. So yes, banks, as you can see, Lloyds, NatWest, basically replicating what happened in the US yesterday, financial selling off quite heavily. And that trend seems to continue in the UK as well. The exception being, as we just said, Standard Chartered, because the results were very good. So Standard Chartered heading back towards, I think, 1,974 pence or so, which is the high we saw back in 2010. That looks still bullish. These are slightly more negative, at least in the short term today, as we can see here.
Moving on to commodities, because we have to bear in mind that it could get rather lively as we get closer to the weekend. I don't know about you, Axel. After covering the markets for so long, two things stick in my mind. That if we are to see some sort of altercation, it normally happens when no one is, or rather, the news aren't reporting it. But also, it tends to kind of happen at the weekend.
Well, Trump likes to do it at the weekend, and so did the Israelis, last year. They sent some missiles over to Iran. Yes, so it would happen towards the weekend, which is why we saw risk-off movements last week before the weekend, before we recovered then on positive data. But I'd be very careful holding positions over the weekend at the moment, simply because of these heightened geopolitical tensions.
So we got oil there, slightly higher. We got gas, just a touch.
I mean, if you look at my oil chart here, the crude oil, what is interesting is that, as I said, we got stopped out on the trade of the week short, but we've managed to now break above all these resistance areas going back to September of last year. That in itself is quite significant. And also we've broken through a downtrend line on Thursday of last week, and we closed way above, not just that downtrend line, but above the last relative high. And for me, as you know, if you follow what I do, that is the confirmation that most likely we've now broken to the upside. So the WTI price may well head back towards the $70 area. It is clearly looking bullish, and the medium-term uptrend remains in place as long as we stay above the 17th of February low, which is around $61.78. So that's the way I see it at the moment, because clearly my view from last year, why I thought we might actually head lower again, was completely wrong. Not just me, to be fair. A lot of fundamental analysts thought that the oil price was going to slide further, and there wasn't much demand for it because there was so much supply. But at the moment, the geopolitical picture basically swishes away the whole supply issue at the moment in the short term, because the fear of not having enough supply drives prices higher. So it's an emotional trade which is taking the price higher, but it may well continue, as you say, especially if we do get another attack on Iran.
Those of you wanting to look at different options of trading this, if you wish, there's also lots of ETFs out there that you can use. PBRT is one of them. Let's have a look at gold as well. Whilst all this is in the background, bubbling in the background, gold still has its nose above 5,170 there, only just. Gold, of course, fell and snapped a 4-session winning streak, and has been in sort of a digestion phase, shall we call it?
Yes, but the interesting thing is that the gold price continues to rise. It doesn't look like Bitcoin. We can look at Bitcoin in a minute. But yes, we've had this very sharp sell-off at the beginning of February. And then since then, we've just gradually advanced. And it is actually looking quite healthy. I wouldn't be surprised if the gold price were to retest its record highs. Now, if we look at my charts, we can see here that we are heading higher. And, we are now, since the beginning of February, back in an uptrend, because we've got a series of higher highs and higher lows. So again, as long as we stay above the 17th of February low, that's the low I look at for all the markets at the moment as my reference point. Well, the trend is your friend. It's still pointing higher. Now, the question is, can the silver price do the same? It is struggling a bit more. You can see silver hasn't taken out its high from the 4th of February here before we had that last leg down. And obviously silver, the decline was absolutely brutal. So it's normal for it to
We did see it, didn't we, a few days before? If there is a metal that is going to slap you in the face.
We did, and Chris and I also talked about, when markets go up exponentially, they do come off very quickly.
They do.
So yes, but at the moment we're seeing the opposite. We're just seeing very little volatility, and us just drifting higher. But what's interesting is when people see this, they tend to sell into it, thinking, oh no, it's sort of going very slowly up, therefore it can't continue. But it can, as long as you just have a series of higher highs and higher lows, it's probably going to go higher. So what I want to see with silver is a close above that high from the 4th of February. If we can manage to go above the sort of $92, $93 area, who knows, we might go back up towards $100. But yeah, short term, we're now on track for our 6th consecutive day of gains. So it's looking pretty good.
Yeah. As you know, I do not have a position on silver anymore, but I have entered as of yesterday into gold, back into gold, because not only what Axel was pointing out, but also look at the price action, trader friends. Look at my chart here. We are seeing the price action above the 20, the 50, 100, 200 EMA there, and that is my health monitor. You can also see that I've drawn that wedge. It's come up, and that triggered an alert for me. Gold is looking slightly perkier than silver. I am waiting to see what happens in the next sessions with silver. You can always look at miners as well if you don't have a position in silver. However, we do have a special guest, hopefully later today, coming in, Julian Wheeler, who is going to talk about silver, and his position is that he is still very much shorting silver.
There also seems to be a big hedge fund, I believe, in Asia, which has been short silver, sort of around the $110 mark, and they also believe the silver price is going to continue to come down. And technically speaking, when you have such a sharp spike to the upside and then reversal, you do tend to have a top in place. So I wouldn't be surprised if silver doesn't make a new high, even if gold does. But who knows?
I certainly would be more comfortable with spot silver around that 70 mark or low 70s. Those of you who buy physical silver as well as trade silver. And also, you know, bear in mind that big red candle that Axel has pointed out. I still have the markings we put in last time. The halfway point in that red candle is where we are looking to surpass before we think there is a chock. Is that what you could? I've heard it said as chock before, and I'm like, you mean change of character?
Oh, I haven't heard that one.
Yeah. Change of.
Talking of shock, not chock. If you look at Bitcoin, it's not looking good. And a lot of people.
Oh, this will make Chris very happy.
Yes, definitely. Try to buy it. But again, you know, if you look at the chart, if you just forget about what people write and think and what you see in social media and so forth, we are clearly in a downtrend. Even since we made the early February low and we bounced back, since then we've seen a series of lower highs and lower lows. I mean, that is the definition of a downtrend. And it looks to me as if we are going to head back down towards $60,000. And when we're nearly there now, we went below $63,000 earlier tonight. And you can see here, basically, as long as we stay below that high from Saturday, which was at $68,707 here on the daily financial bet, well, clearly, momentum is pointing to the downside. We have longer candles which are red, so that's telling you that there is momentum pushing the price lower. Then we have, you know, compared to that, small green candles which are bullish. But yeah, I mean, who knows how far Bitcoin can fall, will fall, but it's not looking healthy at the moment, that's for sure.
And remember, having 10 different versions of, you know, altcoins or crypto, it is not diversification.
No, because I could look at ETH, I could look at Cardano, I could look at Solana, they all look the same. Because it's basically risk-off sentiment in general. And I know that back in the day, I think last year, some people said, well, Bitcoin is the new gold. Clearly not.
So we'll be watching the space for you. Also, we heard people say, you know, silver's the new gold because gold's so expensive. But, you know, you can now see that there is a huge difference in volatility there, which is why we always say, make sure you have this in mind. There's a reason why silver is called the devil's metal. Mexico does also matter for silver because Mexico is one of the world's biggest producers of silver. And I think it accounts for some 20 to 30% of global mine supply in recent years. And it is home to the world's, I believe, 7 biggest silver mines in the world. So that is also something else to keep a lookout on as, you know, if you trade this metal. Make sure you have your mitts on as well. Speaking of mitts, what's the rest of your day looking like, Axel?
Well, we've got at 3 p.m. US consumer confidence. I mean, not that important. I believe the market's now looking at 2 things. A, Nvidia earnings more than anything else. And then B, probably this whole situation to do with Iran and US. As you say, probably over the weekend. So I believe Friday might be an interesting session again. yes, I mean, I'm going to look at probably cryptocurrencies. I covered the Bitcoin yesterday. You can see that on the platform or on the website. And I might look at maybe Ether today. But the problem is, as you say, they all look pretty similar.
And also the other thing to bear in mind is not having a position for now is also a position. Yes. I'm still 70% cash, waiting to go shopping, waiting to deploy. But until the parameters are right, it is also all right to just stay out until the volatility kind of rinses out a bit. So what I like building at this point is my watch list. So I'm going to share with you my watch list. Do your own homework. This is my homework. But I am looking at Netflix is definitely a short. But in terms of adding right now, I would be looking if there was an opportunity at the right price, especially if some of these get thumped by geopolitical issues. Then I would be looking to add to Aviva, Greatland, which I took profit because I entered at 580 and wanted to keep that profit and pay myself. You have to pay yourself, don't you, Axel?
Well, sometimes you do need to do that, of course.
I use it to survive half term. Hensoldt, BAE Systems, some others that I'm looking to also go shopping with that 70% cash that I've got there. Some ETFs that I've been eyeing for some time, looking at entry there or re-entry. Some really good solid stocks that you hear me talk about because they have really good balance sheets and they don't have a lot of debt to service, so they're strong and stable. Hinkle and the diplomas. And for the miners, I still like Atalaya, Cornish Metals, Kefi as well, that produces gold and copper. I'm currently not in copper itself, but I like having the leverage of the miners that I am comfortable with. Sarabi Gold, another one. Last night, Axel, after buying the dip all the way from the beginning of this year, I never sold on Sarabi because it's on my high conviction list. It made the green and is starting to perk up on the chart front. So Sylvania Platinum and Pala Platinum, also two that I am watching for re-entry. Right, and on that note, have a really good day, Axel.
You too.
And also we will put all of Axel's research and also his articles at the bottom of this so you can find it easily. Please slam the like and subscribe button. Do ask your questions to Axel. We'll get them answered for you. Plus, we'll have Julian Wheeler hopefully a little later today, so send us your questions. Until then, happy hunting, trader friends.